Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 327 today. And we're going to talk about how analysts chase market prices. It is a funny phenomena. It is not what we usually think that analysts will be able to forecast where the prices will go. But the prices actually run ahead of analysts' prices, and I'll show you in some examples. The markets were weak today, following from yesterday's fall, and the Fed minutes that were released yesterday also did not give any further confidence that the rate hikes will stop. The rate hikes continue for now, and that caused some strengthening of the US dollar, that caused dashed hopes that interest rates upcycle may stop anytime soon. So that was a bit of a dampener, but nevertheless, Nifty lost net 0.3% only. It did go down quite a bit during the day, but it recovered by the end of the session. FMCG, auto, pharma, and public sector enterprises, these were the stocks that were rallying today. So, as we have seen, when markets are a bit uncertain, money moves towards defensive stocks. So, FMCG and pharma, more or less, are defensive sectors. IT is also, but re- currently, because of heavy negativity in the IT environment, Amazon again announcing 18,000 layoffs, Microsoft announcing next 2 years it will be in some sort of consolidation or not so much of growth to be seen. Salesforce announcing another set of cuts in their uh, employee workforce. So I think the environment, especially in the Western world, remains quite challenging. And with the US sort of being the mother market of the world, it does impact everybody else, and there's headwinds because of that market. But having said that, I think we did pass the day with reasonable tolerance. And you can see here that in terms of the broader indices, Nifty Next 50 actually moved up 0.7%. Mid and small cap 400 was up quarter percent. Small cap index was flat. CNX 500, CNX 200 were also flat, and Nifty lost 0.28%. In terms of weekend investing performances, NNF 10 followed Nifty Next 50 up 0.78%. MI Evergreen up 0.36%. Gold has been gaining a bit of ground, so that hedge is helping there. MI Evergreen, for that matter, has done extremely well in the last 1 year. And currently, there are some offers that are running on MI Evergreen, NY30, and New Year 30, which you can use till 10th of January. So please make use of that if you haven't. MI India top 10 up 0.3%, and most other strategies also between 0 and 0.3%. It was a bit of a listless day after a drubbing yesterday. The major story of the day was the Bajaj Finance fall, even despite showing growth of some 27 odd percent. The market was expecting more, and it fell down by 7% today. After this fall, it is still valued at somewhere 6 times the book, 35 times the earnings. So rich valuations, despite a good fall in the last 1 year. Bajaj Finserv also falling in line. Infosys has been a bit soft for a few days, and I think the Infosys results is coming up. So either market knows a bit about the disappointment that is going to come through, or the downgrade in terms of their forecast that may come through. So something is amiss in terms of Infosys numbers that are coming up, it seems. Power Grid lost 1%, Bharti Airtel lost 0.5%. But other than that, you can see this the steel corners, Tata Steel, JSW Steel did quite well. FMCG, as I mentioned, Hindustan Levers, ITC, Britannia doing quite well, along with Nestle. Energy stocks were flat. Banking was a bit dull with ICICI Bank losing minus 2%, which was the major cut today in the private bank space, and Pharma doing quite all right. Top gainers in the CNX 500 universe, Engineers India, name you are seeing after a long time, plus 7%. So, this public sector enterprise stocks are running ahead of the budget. There is hope of divestment, there is hope of privatization. Apollo Tires running 5% on crude fall in the last 2 3 days. Fertilizer and chemical also running 5%. JBM Auto up 5%. Adani Total Gas up 4.5% today. Top losers, as I mentioned, Bajaj Twins down 7 and 5%. Cholamandalam Investment down 5%. Chalet Hotels down 4%, and IRB Infra after announcing the 10 to 1 split down 3.5%. So, some stocks they are able to run up before the news is released to the public, and then they are dumped on to the public. This is a chart from Charlie Bilello on country ETFs, total returns in calendar year 2022 in dollar terms. So while we are very happy in India seeing that Nifty has done quite well, plus 5% or 4.5% for the uh, uh, year, or maybe a little less actually on a 12-month basis. But in dollar terms, India is down 8.9%. You can see it right here. The country ETF is down 8.9%. Uh, Saudi Arabia, Hong Kong, Qatar doing better than India. All these countries doing better than India. In Turkey is up 105. This must be in local terms. It can't be in dollar terms. I'm not sure about Turkey. I'll check this. But Chile, Brazil, Argentina, Greece doing quite well. This is very surprising. This top 4 5 names. These used to be the dirtiest linen in the market, but now it is doing quite well. Uh, and you can see that uh, Russia's. I think I'll go back and check this chart again because I'm not very convinced about these last few numbers. But other than that, of course, China is down 22.8%, US is down 18.2%. These numbers are looking good. So while we have outperformed most of the other markets in dollar terms, we are still reeling in dollar terms down. So 1 or 2 years of negative returns, and even in dollar terms, becomes a good launch pad for the next 1 or 2 years. This is the Tesla chart going up from $20 to $420, coming down to $113 right now. And one would want to imagine if you were invested here, what would you have done? Let's say you were invested in Tesla since 2016 at $20, and till 2020 you did not see more than 2025. So you have been waiting 4 years from 2016 to 2020, and you are getting frustrated. 4 years Tesla has not gone anywhere, and then suddenly it goes to $60 in 2020 pre-COVID. So your money is tripled suddenly. Maybe you'll sell, maybe you'll not sell. And then from 60 it crashes down to 30. So 50% drop right there. And we are talking about this point going from 60 to 30. Then from 30 in the next 1 year, less than 1 year, it goes to 300. From 300, it drops 33% to 200 or a little below 200. From 200, it more than doubles to 400. There are such volatile movements in every 1 year. Where would you have taken any action unless you had any plan in place? If you were sitting in for at $20 for 4 years, I'm sure most people, when it became $30, $40, $50, $60, would have sold out. Or once got down from 60 to 30, maybe if you had bought at 20, you would think that now it may come back to 20. Let me get out at 30 itself. and then see it go from 30 to 300 in disbelief. Then buy it here at 300, then it comes to 200, you get frustrated, you sell it off again. Then it again goes to 400, you buy at 400, then it again comes to 275. Unless you have a plan in place, the market will keep throwing you off. And let's say you decided, okay, I will not sell it, I will just keep it. I trust Elon Musk. Then you are down 60, 70%. Your net worth, if you are invested solely in Tesla, like a popular fund manager suggested, you are sitting at a 70% drawdown on your net worth. Most people will not be able to bear that kind of a pain on your net worth. So if you have not allocated the right amount to a particular stock, diversification is there for a reason. It will be difficult to act. Anyhow, coming back to the story, 72% drop on Tesla versus 17, 18% drop on S&P 500, 33% drop on Nasdaq. Definitely, this stock, in the last 1 year has been beaten down mercilessly. It may still go down further because the parabola that has been broken here, I should have drawn a parabola here. The parabola that is broken here, parabola breaks many times, retrace 80% of the gain of the price from where they break. So if it broke near let's say 325, then 80% of that would be about uh, 230, 240. So about 100 is the right price for a retracement, and that's where we are coming close to. So maybe it is coming close to a right price near about 100, but who knows? I mean, I really can't say. Now this is a very interesting chart. This is from Bloomberg. So the yellow line in this chart is the price target by average analyst price target who are following the Tesla stock. And there are thousands of analysts, all good analysts, supposedly from fantastic firms. Can you see a correlation between the price in white and the analyst price in yellow? The price is leading the analyst price while it is going up and while it is coming down. The price was leading up here, analyst prices followed. Price was leading up here, analyst price followed. Price was leading up here, analyst price followed with a lag. Price was going down, analyst prices start to fall. Price goes down, analyst price starts to fall. The analyst's assumptions are following the price. Bhao Bhagwan Che. We have been giving you this mantra since last 6 years. Very few people believe it. They laugh at us when we say that we do Bhao Bhagwan Che and we only follow price. But just see the top analysts of top brokerage firms, the top thinkers of the world, they are also following the price because that is the only reality, that is the only truth of the market. So this is extremely revealing. uh, it in some ways fills me up with great pride that we follow the price which at least we acknowledge that we are following price, and all these people are also following price but they are not acknowledging it. They are giving you some story about some narrative, some googly about some fundamental story, something, and then justifying it based on the price movement. So why go into a second order analysis where the first order uh, you know assessment is available based on price? Anyhow, so that was that. This is one very interesting insight from Tavi Costa. Again, chart is from Bloomberg. This is a chart which is the gold and silver miners. There is a ETF called GDX, which is a very popular ETF on the US markets. And I'm sharing all these insights because I would like you to know about all these instruments, all these events, all these insights. These have may or may not have anything to do with weekend investing actually. But the purpose of daily bytes is to just share Whatever comes across interesting to me, I would want others to know also, increase their knowledge, share. And once I share what I learn, it increases my knowledge also. So there is a sort of a selfish construct here also. So this chart is a 3-year chart of gold and silver miners versus S&P 500. So gold and silver ETF divided by S&P 500 index is being plotted on this chart, and the chart is showing a breakout. While this is not very decisive, because if you had created a trend line here, there was a breakout here also, which failed later on. But nevertheless, there is a breakout for now. So there is a sense that GDX is likely to do well versus S&P 500. So maybe S&P 500 will remain flat, GDX will go up. Maybe S&P 500 will drop, GDX may remain flat. Maybe GDX will drop and S&P 500 will drop even more. So in all those cases, this chart should go up, and the next resistance will come somewhere around here, and we will see once it does reach there. Another insight on gold that I had posted yesterday: a lot of people don't give any credence to holding gold in their portfolio. Please remember, central bankers also hold gold in their portfolios for a reason. It is the best diversifier to your local currency if you are not a dollar investor. We in India are sitting all with all our assets in INR based assets. INR stability is dependent upon country's growth, stability of the government, and lot of other external factors. It is not a given that INR will remain stable for the next 20 years. A unstable government may come, a bad leader may come, external environment, oil may go to $200. Anything can happen. So, to protect against that, this is an insurance, because this is an internationally priced commodity. It is not priced in INR. INR is a derivative. We are calculating in INR, but it is not priced in INR. So, what have investors of gold done in other jurisdictions where they have seen uncertainty, where they have seen political disturbance, political unstable governments, weak currencies? The first chart here on the left side is the golden rupee chart. So you can see that from 2000 2001, uh, gold took off, and this is on a per ounce basis. So about 10,000 rupees per ounce went to about 100,000 rupees per ounce, then stabilized for a few years, 4 5 years. Then the next rally started from 70,000 rupees per ounce to 1,53,000 rupees per ounce. Then it has taken some corrections, and now we are at the cusp of making a breakout. So we are somewhere here right now. Compared to this rally, we are somewhere here where we're about to take out the previous highs, and we may get a rally like this from here. So doing very well, 11% CAGR. What more can you ask for from a hedge? Don't compare it to Nifty returns. Even if you compare it to Nifty returns, it's not bad, but one should not compare, because it's a different risk profile. The stock on the right, the chart on the right is gold in Japanese yen. Japanese equity investors have not made any money in the last 20 years, 20 25 years, since 1990. In fact, 32 years. Last 32 years, they have not made any money. But see the amount of money they have made in the last 22 years in gold terms. This is 40,000 rupees per ounce in yen, even lower than that, 30,000. And today it is 2,42,000. So in yen terms, Japanese gold holders have got like 8x return in the last 20 years, where in local terms, Japanese yen term, they've got 0% return in equities. They are sitting in an environment where they get zero in the bank, zero in equity, but they're getting maybe like 10% in gold. You think they've done bad in terms of having a exposure to gold? Third chart is that for Turkey. I don't know how many of you have visited Turkey. Turkey is a reasonably developed place. Turkey is not like Bangladesh or Sri Lanka, although those are also all right to some extent. But I mean, Turkey is almost like a well developed place, and but their currency has been extremely unstable because they've had a dictator who doesn't believe in keeping interest rates high. Just see what the currency has done. And because of that currency, anybody sitting in lira has gone from, in the last 10 years, from 2000 lira to an ounce to 34,000 lira to an ounce. In this kind of an environment where the currency is crashing in Turkey, equities are also not doing well. Gold has saved them. The last chart here is that of Egypt. Egypt saw a devaluation of their currency in 2016-17. The gold price went from 10,000 rupees, 10,000 Egyptian pound to 22,500 Egyptian pound overnight. And now overnight it has gone from 32,500 to 46,500. This is how people preserve their wealth. Real assets. Yes, gold does not have any earnings. Yes, gold does not give any income, but this is how it protects you. Please have some appreciation of all these examples from global experiences, how people have protected themselves, and use it in your own life. USD INR is hanging in tight at 83 rupees to a dollar. It seems RBI is vehemently protecting this turf at 83, but I don't know for how long they can keep doing this. Yes, it's a golden opportunity for the RBI that the dollar itself is now getting weaker. So we may not go here, but I think any resistance which gets hit so many times gives away at one point, and then it shoots up like anything. So I think this kind of a move, which happened 79 to 82, will come at some point, and we will go much much higher. So, this is all the insights I had for today. Thank you so much for watching Weekend Investing Daily Bytes. I hope you are sharing these videos with your friends and family. If you haven't, as a help to me, please share it with one person at least. That way I will be happy that all these efforts of my team to make these daily bites and to share all these insights is reaching out to an audience who can appreciate the knowledge and the information that is there in these daily bites. So please do send it to at least one person who can make use of this, or send it in your friends group or investors group if you have any. Thank you so much. I'll see you in another video. Bye.